Right now, I want to talk about the VA funding fee, what it is, how it works, and how much it costs depending on whether you're doing a first-time purchase or a subsequent purchase. My name is Drew Smith. I'm a licensed loan officer and I specialize in VA loans. Now, the funding fee is a fee from the VA. It's not a lender fee. If you are getting a VA loan, you are going to have to pay the funding fee if you're not exempt from it. So let's talk a little bit about what it is and how much it costs. Now you can find all of this information at the va.gov website. So first, what is it? The VA funding fee, and this is coming directly from the website, it is a one-time payment that the veteran or service member pays on a VA-backed or VA-direct home loan. This fee helps lower the cost of the loan for U.S. taxpayers since the VA home loan program doesn't require down payment or monthly mortgage insurance. So, that's one of the benefits. You've got pros and cons here with the VA loan. You don't have mortgage insurance, but you may have a funding fee if you're not exempt. Now, you are going to be, or you could be exempt for a few different reasons if you're service connected. So if you have a disability rating with the VA, 10% or greater, you are going to be waived from the funding fee, meaning you do not have to pay that. You're going to know if you are exempt by looking at your COE. So again, here I have an example COE. This is not somebody's real COE, but up here, kind of in the top right-hand corner, it's going to say funding fee, and it's going to tell you whether you're exempt or not. So this one is saying exempt, service connected with monthly award on this COE. And then down here, again, it says funding fee. The veteran is exempt from the funding fee due to the receipt of a service-connected disability compensation of $4,000 monthly. So you can look at your COE to see if you are exempt. Typically, if you are active duty, you're not going to be exempt, but every situation is unique and it really just depends. So here we do also have a little note here that you could be exempt if you're a service member on active duty who, before or on the loan closing date, provides evidence of having received a Purple Heart. So there's different ways that you could be exempt from paying the funding fee. But let's go down and see how much that funding fee is. So the funding fee will be added to the loan. You could pay it at the time of closing if you have the cash to do so, or you could roll it into the loan and it can just be part of your loan and you would pay it off over time. So you don't have to pay it at closing. You can still do 100% financing, basically where you're not putting any money down. That funding fee is just going to be added to the total loan amount. So on your first time use, this is when you're first buying a home, so you've never used your VA benefit before, you're putting less than 5% down, your funding fee is going to be 2.15%. However, if you're putting 5% or 10% down, the funding fee will be reduced each time. So 5%, it's going to go down to 1.5%, and if you're putting 10% down or more, it's going to be reduced to 1.25%. Then on your subsequent use, or anytime after your first time use, if you're putting less than 5% down, your funding fee is going to be 3.3%. And then again, it's reduced to the same values. So it doesn't matter if it's your first time use or your subsequent use. If you're putting 5% or 10% down, again, it is the same cost as far as the percentage, 1.5% and 1.25%. So that's a little bit about your VA funding fee. And then again here, it is assessed if you're doing a refinance. So if you're doing what's called an IRRRL, this is where you're just looking at reducing the interest rate. You're not doing anything else. You're not modifying the loan. You're not trying to get some cash out or anything like that. It's an IRRRL, interest rate reduction refinance loan, IRRRL. There would be a funding fee that's significantly reduced though. If you're not exempt, it's 0.5%. However, again, if you are exempt, then there is no funding fee that you would be required to pay regardless if you're doing a purchase or an IRRRL. One more thing of note when it comes to the funding fee is that there's this very unique circumstance that veterans are going to be in and going through. So you could be separated from service. Now you're talking with the VA about getting a disability rating and possibly an award for that. But you're also looking at buying a home. So you could be in this weird area where you've purchased a home, you paid the funding fee, but then later you are exempt and you can actually go back and get that funding fee reimbursed to you. However, your disability award rating has to predate the date of closing. So for instance, if you bought a house January 1st, 2024, first of all, congratulations, you started the new year buying your dream house. That award that you get from the VA has to be backdated before the date of closing. So it would have to be before January 1st of 2024. In that circumstance, the VA would reimburse you. It doesn't go to you directly. It goes towards your loan, and it would basically give you that money back that you paid for the funding fee, reducing your total loan amount. So that is a very unique circumstance that you would be going through, but it's important because if you are going through the process of getting your rating and you're looking at buying a house, you might not want to wait to buy the house because maybe you found the perfect house that you want to be in, but also you're expecting to get a VA rating. So if you do go ahead and close on the house, there is a chance that you could get that funding fee back if you meet the criteria that I spoke about before. So hopefully that helps you understand a little bit about the VA loan and the funding fee. If you want to know more about the requirements for the VA home loan, I suggest you check out this video next.